Dear viewers, welcome to ATS Mutual Funds. I am 𝐂𝐔𝐄𝐅𝐔𝐋, a certified financial planner and a research analyst at ATS. In this video, we are going to review an interesting fund whose investment style is based on the momentum of the stocks. And the fund name is UTI Nifty 200 Momentum 30 Index Fund. So, coming to the structure of the fund, this fund picks stocks only from the top Nifty 200 stocks, and the size of the stocks in the fund is only 30. Coming to the basic details of the fund, NAV as on 7th August is 12.43. Expense ratio for the direct fund is 0.42 and the launch date of the fund is March 12, 2021. Coming to the AUM, the fund has 1,475 crore AUM since its launch, which is just 1.5 years ago. And the fund size is decent till now. Before proceeding further on the details of UTI's Nifty 200 Momentum 30 Index Fund, let us understand the central theme of this fund, that is momentum. So what is momentum? Momentum in simpler terms is the rate of change in prices. If the rate of change is high, then the momentum is said to be high. If the rate of change in prices is low, then the momentum is said to be low. So what a momentum investors plan? How the momentum investors invest? Let us see. Let us say a stock price is going up with a high rate of change in its prices. Thus, a momentum investor will not hesitate to enter at the highs because his plan is to sell further higher. When the market goes up further high, he closes his position with the decrease in momentum. This is how momentum investors work. But why the price increase after reaching a higher level is explained by premier anomaly. What premier anomaly says is, when a news comes into the market on a stock or on economy or anything, the impact of that news on that stock is not immediate. That is because there are several kinds of investors in markets like FIIs, DIIs, FPIs, retail investors, HNIs, etc. So they won't take the decision immediately. They have to revise everything. So that takes time. And after, if the news is going to be positive for the company, then the stock price further goes up. That theory is called premier anomaly. In simpler terms, premier anomaly says investors revise their view on prices gradually, but not at once. This is the entire working of this fund. Based on this theory, Nifty 200 Momentum 30 index works, and UTI Nifty 200 Momentum exactly replicates this Nifty 200 Momentum 30 index which is managed by NSE. So UTI is an index fund which tracks this index. As we have understood the working of momentum, let us check the SWOT analysis of this fund. The strengths of this, coming to the strengths of the portfolio has higher ability to generate higher returns than the broad indices. This is mainly because of its theme. As the fund invests in stocks with momentum, if the returns are positive in the overall market, then in most of the cases, the returns of this fund are expected to be far higher than the broad indices. The second strength the portfolio or the fund possesses is staying in line with the trends. Let us say auto stocks are going up with high momentum. If the momentum continues, in few days this portfolio has higher probability to get the stocks from auto sector. Thus, if the trend continues further, the fund is going to fetch greater returns because of the performance of auto stocks. Coming to the third strength of the portfolio, the emotions carried out by a fund manager are almost zero, because the fund portfolio allocation has a formula based on normalized momentum score of 3 months and 6 months. Thus, even fund manager want to carry a stock forward with the low momentum, it is not possible, because only top 30 normalized momentum scored stocks will be in the portfolio. Thus, these are the strengths of the portfolio. Now let us check the weaknesses in the fund. Due to higher churning, that is buying and selling, the turnover ratio is expected to be high. This high turnover ratio will result in higher taxation of the fund, which automatically discounted in the NAV itself. Coming to the second weakness, in bearish markets, the fund is expected to perform lower, because high momentum stocks are bought at higher prices, and when the bearish market occurs in between, the fall will be higher. Thus, in bearish markets, we can expect a low performance from this fund. However, when the rebalancing period comes, the stocks with high momentum only will be there in the portfolio. That is the strongest strength advantage this portfolio has. Coming to the opportunities, there is a great chances to capture bullish movements in a stock. And coming to threats, economic downturn, geopolitical risk, which can affect the stock market directly, are inherited to this fund as well. Thus, this is the SWOT analysis of UTI Nifty 200 Momentum 30 Index Fund. Now let us check the returns of the Momentum Index. Quarter to date, Momentum Index has given 9.55% TRI. Nifty 200 has given 9.79%. TRI means Total Return Index. And year to date, that is 1 year back from this day, the fund returns are minus 13.3%, while Nifty 200 returns are minus 0.53 only. So here we can see the extent of volatility the fund is going to have. And in 1 year period, the fund returns are minus 3.38%, while Nifty 200 has given positive returns of 9.59%. But in 5-year period, considering longer tenure, 14.92 is the return given by Momentum Index. And Nifty 200 has given 12.11% only. Thus, here is in the longer period, we are expecting the portfolio will perform extremely well and beat the returns of the broad indices. Now let us check the risk parameters of the fund. Here also we are going to consider Momentum Index only, because of the low duration data available for UTI Nifty Momentum Index, and the UTI Nifty Momentum Index is replicating the main index only. So standard deviation for 1 year is 23.66, and for 5 years the standard deviation is 20.88 for Momentum Index fund. Beta for 1 year is 1.19, which is high, but 5-year beta is 0.96 only. Correlation is 0.87 and 0.88 for 1 year and 5 years. Thus, there is going to be 13% deviation from its broader indices, that is Nifty 200. Now let us check the most important part, that is, should you invest in the fund? You can invest in this fund only when you have 3 to 5 years of investment horizon. And you also need to have the ability to hold during the volatile periods of the market. As the momentum theme has the ability to generate high risk and high reward, the best investment mode we suggest for this fund is a lump sum followed by an SIP, so that you can capture the volatility when the markets are down. You can accumulate more units, and when the markets are up, this can be highly rewarding as well. This is like adding completely a new theme to your portfolio. because you might have invested in focused funds, flexi caps, large caps, in any kind of funds, but they are all stocks are picked based on the fund manager's view. Here it is completely a technical call based on a formula. And the expenses for this fund are extremely lower at 0.42, and with the growing AUM we can expect the expense ratio to further go down. And longer the tenure you stay, better the prospects of return in this fund. And finally, with the ATS Demat account, you can hold mutual fund investment as well. You can get the guidance of our experienced equity research and mutual fund research teams as well. Thanks for watching the video. If you like it, please share and subscribe. Thanks again.